What is the Forex market? The foreign exchange market is where currencies are traded. Currencies are important to most people around the world, whether they realize it or not, because currencies need to be exchanged in order to conduct foreign trade and business. If you are living in the US and want to buy cheese from France, either you or the company that you buy the cheese from has to pay the French for the cheese in euros, EUR. This means that the US importer would have to exchange the equivalent value of US dollars, USD, into euros. The same goes for traveling. A French tourist in Egypt can't pay in euros to see the pyramids because it's not the locally accepted currency. As such, the tourist has to exchange the euros for the local currency, in this case the Egyptian pound, at the current exchange rate. One unique aspect of this international market is that there is no central marketplace for foreign exchange. Rather, currency trading is conducted electronically over the counter, OTC, which means that all transactions occur via computer networks between traders around the world, rather than on one centralized exchange. The market is open 24 hours a day, 5.5 days a week, and currencies are traded worldwide in the major financial centers of London, New York, Tokyo, Zurich, Frankfurt, Hong Kong, Singapore, Paris and Sydney, across almost every time zone. This means that when the trading day in the US ends, the Forex market begins anew in Tokyo and Hong Kong. As such, the Forex market can be extremely active any time of the day, with price changing constantly. A brief history of Forex. Unlike stock markets, which can trace their roots back centuries, the Forex market as we understand it today is a truly new market. Of course, in its most basic sense, that of people converting one currency to another for financial advantage, Forex has been around since nations began minting currencies. But the modern Forex markets are a modern invention. After the Accord at Bretton Woods in 1971, more major currencies were allowed to float freely against one another. The values of individual currencies vary, which has given rise to the need for foreign exchange services and trading. Commercial and investment banks conduct most of the trading in the Forex markets on behalf of their clients, but there are also speculative opportunities for trading one currency against another for professional and individual investors. Why we can trade currencies? Currency trading was very difficult for individual investors prior to the internet. Most currency traders were large multinational corporations, hedge funds or high net worth individuals because Forex trading required a lot of capital. With help from the internet, a retail market aimed at individual traders has emerged, providing easy access to the foreign exchange markets, either through the banks themselves or brokers making a secondary market. Most online brokers or dealers offer very high leverage to individual traders who can control a large trade with a small account balance. Forex trading risks. Trading currencies can be risky and complex. The interbank market has varying degrees of regulation, and Forex instruments are not standardized. In some parts of the world, Forex trading is almost completely unregulated. Most small retail traders trade with relatively small and semi-unregulated Forex brokers/dealers, which can, and sometimes do, read quote prices and even trade against their own customers. Depending on where the dealer exists, there may be some government and industry regulation, but those safeguards are inconsistent around the globe. Most retail investors should spend time investigating a Forex dealer to find out whether it is regulated in the US or the UK. Dealers in the US and UK have more oversight, or in a country with lax rules and oversight. It is also a good idea to find out what kind of account protections are available in case of a market crisis, or if a dealer becomes insolvent. Pros and cons of trading Forex. Pro: the Forex markets are the largest in terms of daily trading volume in the world and therefore offer the most liquidity. 2. This makes it easy to enter and exit a position in any of the major currencies within a fraction of a second for a small spread in most market conditions. Con: banks, brokers, and dealers in the Forex markets allow a high amount of leverage, which means that traders can control large positions with relatively little money of their own. Leverage in the range of 100 to 1 is a high ratio but not uncommon in Forex. A trader must understand the use of leverage and the risks that leverage introduces in an account. Extreme amounts of leverage have led to many dealers becoming insolvent unexpectedly. Pro: the Forex market is traded 24 hours a day, 5 days a week, starting each day in Australia and ending in New York. The major centers are Sydney, Hong Kong, Singapore, Tokyo, Frankfurt, Paris, London, and New York. Con: trading currencies productively requires an understanding of economic fundamentals and indicators. A currency trader needs to have a big picture understanding of the economies of the various countries and their interconnectedness to grasp the fundamentals that drive currency values. Summary. For traders, especially those with limited funds, day trading or swing trading in small amounts is easier in the Forex market than other markets. For those with longer-term horizons and larger funds, long-term fundamentals-based trading or a carry trade can be profitable. A focus on understanding the macroeconomic fundamentals driving currency values and experience with technical analysis may help new Forex traders to become more profitable. Over the past few years, trading robots or algos have become more widespread, and this could completely revolutionize the way Forex is traded. Thank you for watching. We hope you enjoyed our video from our 5-minute trading series. Have a look in the description for notes and more information and links from this video. We would really appreciate if you would like our video and subscribe to our channel. If you have any comments, please do comment below. Have a great day.